Morning guys, hope you're doing okay. I'm going to make this bulletin video a little bit quicker because I want to talk about the Euro USD and the Pound USD because we've got those signals. So at the high level we're risk off, and at the low level we're risk off in so much that the retail guys bought the dip, and if they continue to do so this number is going to increase. If the number increases we're going to be selling off because there's 8 people buying risk versus the 1 person selling. Now people should be conditioned to short, and it's very unusual for them to be buying on average, so they need to be conditioned and put into a position where they're going to be scared. So they might have to invent a news event, whether or not it could be North Korea or Iran, or it could be Russia, Ukraine. It has to be something that's going to cause them to panic, basically, because this is unhealthy. And so just bear that in mind. We should probably be selling off because of that. They need to invent a story, and so this number reduces, and then we go back into negative. If we're a positive number, it's very unhealthy because retail guys are buying on average. So be careful. VIX is still very high, but we're not really spiking too aggressively. We sort of like seem to be capped around here, so be careful. Dollar CAD has been green all week, so maybe you might have caught that. Yesterday was pretty horrendous for price action, so yesterday might not have been so good, but the week you would have done quite well on the dollar CAD. So that was green all week. Nothing really sticks out as red, perhaps UK 100. Currency strength meter is telling us the Swiss strength, and apparently the interest rate hike wasn't priced in the futures, so that's why it really did rocket. And you can see how it's strong on all time frames now. On the monthly there's going to be a big battle between the dollar and Swiss, so if the dollar concedes, the dollar Swiss is going to be a good short technically. And if we look at the bubble, we can see the Swiss is strong buy, right? But the dollar is strong buy as well. So ideally, you'd want those two to distance over time. And the reason for us to get the GU and EU is this distance here, which isn't great. We really want the dollar over here and the pound and the euro over here, ideally. And probably we want those bubbles to be smaller as well. We want them to be like yen size. And quick look at the SSI. So S&P is way too unhealthy. That number needs to come down. The only way it's going to come down is if the retail guy's short, and they'll have to read a news event and then panic. So it could be a new strain of coronavirus. I don't know, but something needs to happen. So yeah, that's that. And you note that the indices are all red, and that goes back to the risk calculation at the very top. S&P is, well, this is making a risky buy, but what's happened is that they've been buying the dips. See, they bought the dip here, for example, and when they do it, price falls every single time, and they're selling it now so we can come up. However, they could just simply buy the dip again in like an hour's time. If they do that, we'll fall. So this is why you absolutely need to get a copy of the FXCM trading station. This is your homework for the weekend. Do get a copy of it, and then you can see, you can see if it crosses or not. And what I was advising, I guess you could say, is that what we want to see is note the percentage at the cross, and then wait for a sustained move after the cross. So we want a 3% move after the cross. This is what I'm going to recommend that we do. So what happens is that we can maybe get to 71%, and then they'll buy the dip again. And of course, if they buy the dip, we'll fall. However, if we wait for 3%, that might just be long enough time and a sustained move strong enough for a rally. Okay, so what we're going to do now in the technical channel is that when we have a cross, I'll record the percentage long, and then you'll have to just check whether or not, how much further we've come off that percentage. So I can't really be sitting here all day just checking percentages. And if you're trading an instrument, it's worthwhile you having a look at the trading station, because I don't know what you're trading exactly, and this covers currencies, commodities and indices. It's very, very powerful. And so yeah, if you need help at all, let me know and I'll get you set up. Okay, and so that's just to recap. We're going to just wait for a 3% move after the cross, basically. So that's what we're going to do now next week. Gold, that was a naughty spike. We made a doji, and of course that doji candle was like, oh, that was quite bearish. We broke that low. I think we just nearly broke that low, and so it caused them to short, and they sold it, and so we came up quite aggressively actually on that move. So you can see how you can see how the sentiment works, and this is like the best indicator you can get. Hexagon is the hypothetical sell, and it's sideways. So yields have come down a bit, and they're still high, but they are coming down a bit. Now what we want is them to track this this line here. So this can come up a bit, and that can come down a bit, if you see what I mean. And maybe we might even have a steepening of the curve. So these will have to come down in the middle. Yeah, the high yield support a stronger USD. Now it might be because these got these fell yesterday. It might have been the cause for some USD weakness, but it was very aggressive, the selling. So I'm not sure if it was the yields, but they have come down quite a bit. So it might have been to do with the the price action that we saw yesterday. Step matrix. Don't look at AJ for US 500 correlation. It's only got a 16% probability of tracking the same move. However, CAD-Yen is tracking it quite well at 76% probability. SLC update. Now, dollar Swiss was the largest mover yesterday for a buy, and then it moved to largest mover for a sell. So it did really whipsaw and caught a lot of people out. It shifted 17% in one day, which is quite a big move. Gold also moved a lot at 9% shift, probably because of the technicals. So unless you look at the sentiment, you're going to get caught out, I think. What else? Our largest stop loss cluster is AU, which is really huge now, and it's below at 62.95. And signals, no signals yesterday. And weekly total is amazing. It's 228. Monday was fantastic for us, so I'm really happy. I think these signals are going to be well. I think they'll do well, but we'll probably want to look at some levels just for entry and stuff like that. So I am going to make a second parter. So I'm going to pause this video now, and then we'll just look at the GU and EU technicals and sentiment.